Back to another video, and in today's video I do want to give you guys a quick update on gold, Nasdaq, what is GBP, USD, Euro JPY and USD JPY from a technical and a fundamental perspective. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoyed the video, please smash the thumbs up for the YouTube algorithm there as well. And also thank you so much for all the support from the YouTube members as well as everyone else is taking out the time out of their daily days to come and watch the content. And I hope you guys are inspired and educated at the end of the day there as well. We are going to start straight off the bat over here. We do have a 𝐦𝐨𝐬 stocks are set to rally again. As inflation tends to, we're slowly going to drop there as well, but I don't want to focus too much on that article over there. Now, before we get to that, it's very important to keep in mind that we know that the dollar index has got a negative correlation with the stock market as well as gold, right? What that means is when the dollar index increases in value, the stock market tends to drop, including gold. Now, the dollar index increases in value when investors becomes interested and when interest rates are hiked, and interest rates are hiked through high consumer spendings, and in order to bring down, which is then currently which ultimately leads to higher inflation. And the only way to bring down inflation is to hike interest rates to encourage consumers to spend less. And when consumers spends less money, what you'll find is this is what happens when you have a zero interest rate. This was at 2022, at 2020 when we had the pandemic. This is what happens when there's no interest rates. People spend money because the interest rates are low, and this is what happens when you increase interest rates, because people have to repay all of the debt acquired there at a highest interest rate, and this means there's no money left to spend on the market. Now, because of that, the higher the interest rate, the more investors want to invest in that currency. But ultimately, a strong dollar index discourages gold, discourages precious metals as well as the stock market there as well. That says here the Fed is set to raise the interest rates by 0.75 basis point, and there's lots of debates that they could hike it even higher. It's also believed to say that JP Morgan, the president at JP Morgan, says that a recession could be the ultimate option for the US to get out of inflation. Now, if that is the case, if the US does go into a recession, basically what happens is central banks will undoubtedly move interest rates to try and revitalize the economy during a recession, which influences the value of the currency. So what that means is that if a country cuts their interest rate, that means that the value of the currency then goes lower, while hiking interest rate increases it. So if they do decide to go into a recession and the dollar drops, that means that there's some room for the stock market to increase in value there as well. But they still need to bring down inflation, and the only way to do that is to hike interest rates. And this is what happens when you keep pumping money into the market and not think about what the long-term solution is going to be. Now that we know the Fed is going to hike interest rates by 0.75 basis point, we do anticipate the market to react to it negatively. The stock market's going to continue to fall, gold's going to continue to fall, and then any pair currency that trades against the dollar is going to continue to fall, and every pair that is standing in the way of the dollar index will also fall there as well. It's important to note that we do have those interest rate decisions coming through next week, Wednesday. So it's important that you understand that we do get into next week. You have to be careful because we do have a whole lot of news coming through with the NFP in there as well. And if you're on the wrong side of the market, then it's too bad for you. Stay out of the market before high impact news, because it's better to trade what you know than what you think you know is going to happen. Now we're going to start with the fact that we expect the market to either consolidate or continue lower, because we expect the dollar index to increase in value. So we're going to go and apply technical analysis using that information as we just acquired there as well. Now, here on the monthly time frame, we can see that gold is already in bearish territory. The market had been consolidating for a couple of months over there, and then finally broke below the strong level of support, came back to test it as resistance, making way for the market now to continue lower there once again as well. Now, here on the weekly time frame, what do we see? Now, from a weekly perspective, it's very clear that we have the market printed below the strong level of support that got broken, came back to test it as resistance. Apart from that, the market also printed this head and shoulders pattern. Now, when the market prints a head and shoulders pattern, that is considered a bearish pattern from a technical perspective there as well. Yeah, on the daily time frame, what do we have? Now, from a daily perspective, we can see that the market had given us this W formation. After W formation, you normally expect a pullback to the neckline, but because the neckline has been broken, the market's now trading back in that bearish territory, and also printing the right shoulder as we identified from a weekly perspective. I do expect the daily candle to close below this level. On the retest, we can definitely expect the market to continue lower. Now, we do have the strong level of resistance that the market broke above, came to test it as support. Support's not holding. Once support gets broken, it won't become resistance as once again. So I do expect the market once again to close below this level. On the retest, start looking for that continuation to the downside for the market to come and test this previous level of support. The Nasdaq 100 here on the monthly time frame. What do we have now? This level over here is where I anticipate the market to pull back to. This level over here acted as a strong level of resistance. Mark broke above that, never came back to test it as support. And what better time to come and test that support than what we have now on the weekly time frame? What do we have now? Here on the weekly time frame, we can see the market had broken below this very strong structural level. Here acted as a level of support, broken above that, came to test it. That support broke below support, come to test it as resistance. I can see that the resistance is not doing too good there as well. Here on the daily time frame, what do we see? From a daily perspective, it's clear that we could have the potential start of a consolidation phase depending on where this daily candle close. Now, it's important that we are reactive and not predictive and learn to adapt to the ever-changing market environment. If we do get a daily close below this level, then I anticipate or I expect the market to continue lower. Alternatively, if by any strike of luck this daily candle does close above this level, then we could definitely see the Nasdaq continue slightly higher. Again, my bias on the stock market will remain bearish, up until inflation starts to come down. Alternatively, this is kind of what I see happening in the market, but for me, this is my first preference there as well. Next up, we've got GBP USD, and GBP USD, we can see from a daily perspective, this market hasn't moved anywhere, but we have created a level of resistance which the market had broken above. We came to test it as support. Support's not holding. All of that support's now once again the resistance, and again similar price action to gold due to the negative correlation. So we expect a pullback, then a continuation to the downside, and that the market would then complete or start this range that it's supposed to. Alternatively, if you do get a break below this, then I do expect the market to continue lower and test that previous levels over there. If it doesn't do that this week, then next week definitely, because there's a lot of news that's going to impact the dollar index next week there as well. Next up, we've got Euro JPY. Now, Euro JPY, well, all JPY pairs has become very interesting because of the fact that Japan has started to recently intervene into the Forex market. Now, if you look at the Japan basket, right, and you look at how this market has been trading for all this time, so you can see the Japan yen has been very bearish, right, for as long as the pandemic started, and this is what happens. Basically, what happens is that when a country doesn't hike or raise their interest rates, therefore there's no interest in buying a currency who's losing value over time. Now, investors are not looking to invest their money or their time into this currency. However, Japan recently started coming through, and you could see that we had some manipulation in the market, if I have to say it to you like that. We had the market come out, had a whipsaw, completed this information at the neckline, then pulled back. So you had this price action, but you have to remember there is a very good opportunity in this market here as well. Now, the important thing for us is if this market does give us a clear daily close above this level over here, then I do feel that we are safe to go. Now, there is two things that you have to monitor if you do potentially want to get into this. You want to wait for this daily candle to close above this level before you take the setup that I'm going to explain to you about. Now, what do we have over here? Now, before I get onto the daily time frame, okay, it's important to note that on Euro JPY on the monthly time frame, we can see this market is currently trading at a very strong level of resistance. Okay, now this is a very strong level of resistance. This level of resistance was formed in 2014, and the market's back to test it once again. But to also say that this is the level of year is not the best thing to do, and you'll see exactly why I say so. Now, here on the weekly time frame, firstly, we can see that the market had broken above the strong level of resistance, came back to test it as support. The market printed that candle with that wick, and the market is about to go and fill it in there as well. Now, on the daily time frame, if you zoom out just a little bit and more, you'll see that this is the actual structure here that the market had created, which tells me that there is still some room to the upside for the market to potentially go and wipe out this liquidity here. Now, this is how we're going to approach the situation. Okay, the market is currently stuck within this range, and because we had broken above that, we're going to use this level, because the last time I made an update on this, the market was at that level. I explained the reasons for what we can expect the market to continue lower due to this massive impulse correction, and I expected that continuation to the upside. Now, if this daily candle closes above this level, then by all means we can continue this move to the downside. Alternatively, if this market doesn't close above that, then I do anticipate the market to continue lower, and I guess we could probably just be realistic and not think too long term, but then I do expect this market to continue lower. Now, next up we do have USD/JPY, and USD/JPY has been trading bullish for as long as I can remember. And USD/JPY also, this is basically the structural level that I was also referring to earlier. Now, the market is currently at that level, testing it, and this is the ultimate level that we do want the market to come and test next. But we do expect a rejection from this level. On the weekly time frame, what do we have now? From a weekly perspective, we can see we had this massive impulse. Now, after an impulse, you expect a correction to at least the 0.50 Fibonacci, and we can see the market had not pulled back as anticipated. Now, the good thing here is we can see how this weekly candle last week closed below this level, structural level, that's lining up with the monthly time frame on USD/JPY. Now, on the daily time frame, what do we have now? From a daily perspective, we can obviously see here that USD/JPY had been consolidating, and then we had that breakout, and the market broke above that, came back to test it. Now, the safest way I would say is that if we had to continue long on this pair, right, it's just because the tricky thing about trading USD/JPY is that the one needs to be weak and the other one has to be strong. If both are weak, then they both move. Well, then this pair tend to move sideways. But if we do get a clear break above this daily, which I probably see, because even if the JPY increases in value and the dollar index increases in value, this market will continue higher. But every other pair trading against the Japan yen will then decrease in value. Alternatively, if we don't get what we're looking for, then I do expect the market to continue lower and hit this level once again. And then from there, we can then look at the price action that we're going to get on the Japan basket to make a further decision. I want to say thank you for your time. And as always, cheers for years.